global high conviction fund, and every time we have the webinar, we ask you what you think the forward looking returns are likely to be over the next 12 years. And I think maybe it's a little bit of sort of under promoting what it is that you guys do and are capable of. But certainly in the last 12 months, we've seen this portfolio generate about a 21% return versus your prediction at 8. What are you thinking? What's the next 12 months hold in store for us?
Yeah, I'm really sorry to give you 21 rather than 8. No, look, I think as you get older, you realize that in fact, in the long run, equity returns are pretty good at around 10%. And I think during any transition in the way in which economic growth shifts from one source to another, I think that you typically see higher volatility, which impacts the return. Yeah, look, I think that if you can make 10% per annum from here relative to even a more accurate rate of inflation here in Australia, which is probably running nearer 4 or 5 than 2 or 3, I think that's great. And obviously we're delighted with what we did. And I think that you should view that 20% as being exceptional. I think there are probably managers who've done even better than we did. But the point about the 20% we made is that it comes with diversification and risk control. So it's been a pretty consistent return, which is quite important. Many of you will invest on a continual basis, and it's called variance drain. But if you invest on a continual basis, putting money in each quarter, each month, the journey that is less volatile in terms of the ups and the downs gives you more end value than the journey which is highly volatile. And so controlling that volatility is part of what active management is all about. And that's what we've been able to do through the use of quite sophisticated risk models, etc. So I can't promise 20-odd%, but I can promise that the market leadership, I can suggest that the market leadership will change and broaden out. And as I said before, at the very start of this presentation, I really would favor investing equal weighted over cap weighted. I think the market will broaden out. You're going to see leadership by different sectors from what we've seen in the last couple of years. Not saying AI is dead. I'm just saying that you should be investing in the picks and shovels rather than prospecting for nuggets of gold.